Hey guys, Toby Mathis here, and middle of tax season, and everybody's already asking the question, should I file an extension? So let me just break it down to you. I'm going to give you a couple of basic rules, and then I'm going to give you some golden rules to follow. So number one, if you are in the category of taxpayers that owe money, which I'll just call that category number one, you owe, or maybe you're at zero, but you're not owed money. You're not owed a refund yourself. So I owe. You're in that category. I don't know why you would not file an extension, because here's the rule. The rule is, in the United States, we pay as we go. If you have a job, you know that your employer's withholding and remitting it already to the federal government. It's already going to the IRS. It's already going to the Treasury. You're already getting your employment taxes, everything out, right? And quite often, you're owed some of that back at the end of the year because they take out a little bit more than usually they need to. If you're one of those, you're going to be in the second category of people that are owed money from the IRS. Now, I understand if you guys file on time because you want your money back, but everybody else, I kind of scratch my head on it. Because if you're in that category and you owe money, all you have to do by April 15th, which this year will be April 18th, but April 15th, all you have to do by tax deadline is pay your tax. You're supposed to be paying it as you go anyway. If you're like self-employed or your typical taxpayer, you're either paying quarterly or you're having it withheld. If you didn't withhold and you didn't pay quarterly, then just make sure you've paid your taxes by April 15th, this year, April 18th. And voila, you can avoid having penalties and things like that, because there's two types of penalties. There's failure to file and failure to pay. You don't have to file your tax return on April 15th. You get an automatic extension that'll take you all the way to October 15th. I don't know why people don't take advantage of this. This is no different than if you were in college or high school or wherever and the teacher said, your homework is due on Friday. But if you want, you could be due next Friday, the Friday after that, or 2 months from now, right? And you're saying, oh, I just want to get my homework done. Okay, I get it. Maybe get it done early, but you have a longer period of time afterwards to edit it, maybe add in some different facts, whatever. You have extra time. So all they're doing is forcing you to do what? And quite often, it's forcing you to make mistakes. And more importantly, if you're an investor, chances are you're getting K-1s or other information from people that are outside of your control. And what do those people sometimes do? Just like me, they're looking at their business over the summer for the previous year. Quite often, you're looking at your financials and you're estimating, where are we at this year? What's our cash position look like? As an individual, I do the same thing. What do I look like? Are there things I can do now, knowing what I know now, halfway through the year, close to 2/3 of the way through the year, that I say, you know what, I'd like some of that money back that I paid in tax, or that I was going to pay in tax, and I'm going to lower my tax bill. There are things. For example, I could do a cost seg on real estate and lower my tax obligations, or create a loss, or minimize my tax burden for last year, all the way up until I file my tax return on October 15th. If I have individual properties that are going on page 1 of my Schedule E, I get to choose. Hey, do I want to break it down and accelerate my depreciation? Do I want to take bonus on 5, 7, or 15, or any of them, or just one of them, or 2 of them, or 3 of them? I have a lot of control. If I'm self-employed, do I want to make employer contributions? Or if I have a 401k, do I want the employer contribution to be made? I have up until the employer files its tax return. If I'm in a syndication, those folks are being forced to rush out their K-1s so that they get everybody their K-1s, and then they're going back and saying, by the way, was there anything that we could do that would be tax advantageous for us, or do we need to restate? And the answer quite often is yes, and now they're reissuing K-1s that are different than what you just filed on your return, because you were that person who said, I need to file my return on time, right? Your return is due October 15th if you're an individual, because you get an automatic 6-month extension. If you want to file it on April 15th, I get it. But there's very few times when I would suggest that you do it, and they are, in order, getting a refund, or 2, because you have a lender that requires it. And that's it. Otherwise, I'm not filing my return until it's actually due, which is October 15th, because so much can change. And I'm right there with a lot of the folks that went through the changes from brokerage houses, for example, and reporting options. And they all screwed it up the first year, and we're sending out restated tax forms to people. You have late 1099s flying around. You have restated K1s. You have all these things coming out. And you have a lot of flexibility in your return. And what does it all add up to? Don't file your return on April 15th. Take that automatic extension. And if you have a business, do it on that one as well. So if you have an S Corp or you have a partnership, push it all the way out, get it into September if you can. And again, there's a number of reasons, because you can still do things that lower your taxes for last year all the way up until you file that return. But it's more because of accuracy. You do not want to have somebody restate a K1 and then you're forced to amend your return. Just figure out what your tax obligation is, pay it, and quit worrying about it. Because if you file the extension, you don't have a failure to file penalty. The worst case you have is the failure to pay penalty, which I could show you how to avoid that too here in a second. But the failure to pay, non-payment, is 0.5% each month of non-payment. So it's 6% a year. So you're getting a 6% loan, which sounds pretty good right now. If you have a payment plan, that gets cut in half. So if you're one of those people that can't pay, you have choices. A lot of people just sit on their hands or they don't do anything, which is not going to be you. Do not do that. Do not file and not pay. File your return, even an extension. And you haven't said, here's what I owe you yet, to the IRS. File that extension, pay the estimated tax. If you can't pay it, then you have some choices. Number one is if it's a small amount, you can automatically start to pay it over a period of time. Like you just, hey, I'm going to pay it all in the next three or 4 months. You don't have to ask for permission for that. If it's a large amount, up to about $50,000, I believe you can automatically get a payment plan and lock in and lower the interest rate and pay it over a payment plan. I think it's 0.25, so it's a really small amount, and then you can pay it over months or years. If you are, I'm way in over my head and I have a tax liability and I screwed up and I just got a big amount, then you could possibly go to the offer and compromise. You have a 10-year statute or the IRS has a 10-year statute to collect. So the farther you get down those waters, the more likely they are to negotiate with you. But if you owe a larger amount and it's really gonna hurt you, like you are underwater and you don't have the funds, then by all means think about doing an offer and compromise. And I would use a professional, an attorney or an accountant under that. But do not do nothing. So file an extension. Even if you owe, file and request do a short-term payment plan. Like you don't even have to ask for permission to start paying it over time. You can pay electronically. You can seek a payment plan would be option number 3, which is if you owe up to about $50,000. If you owe a lot and you can't pay it, then it's possibly engage somebody and go negotiate it. What you do not do is option number 5, which is 5 will no way do nothing. No way, because if you do not file your return and you have a do not file, do not pay, it is 5% per month up to 25% of the tax liability. So do not do a non-file, non-pay. And when I say non-file, it means you didn't file an extension, you didn't file a return. As long as you file the extension, you're still good. Now, if you want to avoid any interest, if you want to avoid any penalties, and you owe taxes, this is how you avoid them. Number 1, you pay 100% of the previous year's tax. So if I'm sitting here paying 2022 taxes, which means that we're sitting in 2023, I could pay what I paid in 2021. Now you can do that up to an income threshold. If you're married filing jointly, it's $150,000. You go above that, you need to pay a little bit more, and you're going to pay 110% of that. If you are single and you're making over $75,000, then you would pay 110% of last year's amount. The other way to avoid penalty is to pay 90% of the amount you owe in 2022. 90%, no penalties. You can avoid getting hit on that if you pay the 90% of the amount. But if you, otherwise, you could be looking at some interest. And the interest, again, isn't horrible. Non-payment is 0.5% a month. But if you want to avoid any sort of penalties in interest, then just make sure that you have paid 90% of the amount that you owe in 2022. And of course, you could just figure out the actual amount that you owe and pay that and not have to worry. But if you're in that weird, oh shoot, what should I do? I'll tell you what our rule of thumb is. Our rule of thumb here is pay 125% of last year's. You want to make sure that you're not going to owe and you're not going to have to come out of pocket in October. Pay 125%. You might get a refund, or you just apply it to the following year. Either way, if you are doing your return, then I'm going to give you guys some real simple rules on doing your return. This is for those of you guys who feel compelled to file on time, which, again, the April 15th deadline, which is technically early because on time is actually October 15th. You get an automatic extension. But if you feel compelled to do it, please e-file it. Please use direct deposit. The reason that you do these two things is because paper filing with the IRS during COVID, it was over a year wait. And it's not that bad anymore, but it's still pretty bad. It's not as fast as doing the e-filing. And then if you're waiting for a check, you could be waiting a while. Like we had people still waiting from last time I checked, I still had a client waiting. And you're just waiting on the IRS to process and mail out a check, and you don't want to be in that situation. Almost all of those were paper returns. And sometimes you have to do a paper return, but if you can avoid it, do the direct deposit. Make sure that if you have forms that are reported to you, that you are reporting that income. So like if you want to see an audit get triggered, boom, and you want to have a problem, make sure that that you have 1099s that are not reported, that you've received. Like make sure that you're not reporting all that income, or K1s that you're like, I'm not going to report that. No, it's going to trigger you for a correspondence audit. So make sure that, and I don't care if you look at last year's return and count up, like, all right, I had these 1099s, these 1098s, here's a W-2, here's my K1s. Add up everything that you received that was reported to you, and then verify whether you have it for this year or not. If it's not there, then check to make sure that maybe they may have sent it in, maybe got lost in the mail, maybe somebody else got it, or maybe misplaced it. But just make sure, go onto their website, download it, print it out. Make sure that if there is something that's being reported to you, that it's on your return. Little nuances. I'll just say this every year, that if you want to get your money first, be first. So if you're owed a refund, don't wait. Go ahead and get your stuff in. If that's something that's important to you, make sure that you're getting in there, because it is first come, first serve in this country. And then little things like if you have any sort of child credits, probably not going to be a huge issue for a lot of you guys, but if you do, just make sure that you're actually the appropriate party and that somebody else isn't claiming them, because it'll get your return rejected. We saw a lot of that last year, but I don't think we're dealing with that so much this year. So those are my rules, most simple advice. If you are an individual who owes money, I would say file your extension, pay the tax that you estimate on time. If you want to be really careful, if you look at it, pay 90% of what your estimate is, just to be careful. If you want to just make sure that there's no way you're going to get hit with any sort of interest, then what I would do is pay 125% of last year, and you've paid above what was obligated for you to make sure that you had some there, because no matter what, you're supposed to be paying as you go. And if you end up with an amount that you owe, you're still going to pay interest on it. So here's an easy way to make sure that you don't. And if you saw yourself, if you were in a position where you made a lot less this year versus last year, then maybe you're just going to do the 90% to make sure that you don't have to worry about any penalties or interest. All right, and that is it. Make sure that if at all possible, that you're using all the deadlines to your advantage. File those extensions. I can't stress that enough, unless you have a compelling reason not to. And the two most compelling reasons that we see are I'm owed money. The other one is I need to report it because my financing, my bank needs it. And you may want to ask them, hey, if I prepare it, here's my prepared copy, but a lot of them will say, I want to see that it was filed, in which case then, hey, now you have a compelling reason to file. Otherwise, file that extension, pay your tax that you think is owed, use those, the guidelines, the 110% of last year if you're over 150 AGI, married filing jointly, 110% of last year if you are 75, if you're over 75,000, 100% of last year if you want to avoid any penalties, or 90% of this year to avoid all the penalties. And then just remember the interest that you pay on tax obligations that aren't paid timely. It's not horrible. It's like 0.5%. The one that really kicks your butt is that 5% per month penalty. It's capped at 25%, and then it still accrues interest for failure to file your return. So whatever you do, do not do nothing. File that extension. If you can't pay your tax, then don't sweat. It's not huge. It's not massive amounts of interest. Pay it over time. Like give yourself 6 months. If you can't get that done and it's a small enough amount below 50,000, avail yourself to an automatic payment plan. If it's over $50,000, probably want to retain somebody and talk about negotiating a payment plan. Or if you feel comfortable, hey, this is like a one-time thing and I'm probably going to be able to stretch this things out, then negotiate a payment plan. And then remember, one last thing, I'll throw this at you. If you do get hit with penalties and interest and you want to get rid of that penalty, it's the first time you've ever done it, you've never made a mistake before, and you never not filed before, and there's a reason for it that you can justify, hey, there was stuff going on in my life, or hey, I was relying on advice or whatever, there's usually a first-time abatement. So if you get hit with something where, oh my gosh, I didn't know this return was due, and now I have all these penalties, oh, I cannot believe it, look at doing the abatement before you get too worried. Do an abatement, give the circumstances. If you're one of our clients, please reach out. We'll do the abatement letter for you. We know the magic language to use. And 90% plus of the time, they grant that first-time abatement for the reasons that you give, and you could avoid the penalties. The interests are another matter. Interest isn't horrible, but just remember, you're looking at that 0.5% per month, 6% a year, or it's going to get knocked down in half if you're doing a payment plan, 0.25 a month. And so just keep those things in mind. These things should not cause you massive amounts of stress. Give yourself the time to be accurate. Give yourself the time to be able to use all of the tools that are at your disposal. Tax avoidance is not a crime. Tax avoidance, there's nothing wrong with it. And if you find yourself in a situation where it makes sense to do action that'll avoid tax from last year, go ahead and do it. You have a long period of time. Don't close that door on those options unintentionally by believing that filing a timely return is April 15th, because it is not. You pay your taxes by April 15th, but you can file your return individually all the way up until October 15th. That's it. Thanks, guys.